Nigeria has seen a wave of M&A activities in 2013. So for more on that and how that has impacted the economy at large, I'm now joined by Folasope Aiyesimoju, Head Financial Advisory at Stanbic IBTC Capital. It's great to have you on the show with us. Let's kick off now. So what are some of the factors that have driven the wave of activities that we've seen in that space this year? There have been quite a few.
Thanks, Didi. I think there are a number of factors, and one has to look at M&A in various, I'll say, sub-segments. You have domestic M&A, you have cross-border M&A, you have private equity-driven M&A, and we've also seen plenty of activity in various sectors, largely things that are related to the consumer spend, and also things related to the oil and gas industry. For domestic M&A and sort of cross-border foreign acquirers looking for assets in Nigeria, it's the many common themes that we've spoken about. It's economic growth, a large, young, and fast-growing population. It's declining inflation, reasonably stable FX rate, and it has encouraged domestic players to acquire, to grow, and foreign players to come into the market. On the oil and gas front, there is an indigenization policy that has seen a massive shift in the ownership of oil and gas assets from the international oil companies to the domestic oil companies. And we've seen divestment rounds by ConocoPhillips, Shell, and Chevron. And I think these factors have greatly encouraged the level of M&A activity. But one crucial point I should touch on is that for there to be M&A activity, you need corporates of sufficient size and sophistication to engage in this M&A activity. And as the economy has grown and developed, we've seen the country produce corporates of scale that can engage in M&A activity.
There's also been a lot of foreign interest in Nigeria in the M&A space. So what's driven that?
I think as various companies have expanded globally, I would say multinational companies have expanded. People have gone into Asia, the Middle East, South America, and I would say Africa is the last frontier that companies have tried to access. And the reasons for this, I think, are reasonably obvious. While growth has reduced or tapered across the rest of the world, there's still a significant degree of growth that one experiences in Africa. And Nigeria is the second largest economy on the continent, the most populous country on the continent. And so many acquirers are looking to Nigeria to tap the country's growth opportunity.
And who are some of these foreign players that we're seeing in the M&A space in Nigeria?
I would say the foreign acquirers for Nigeria come largely from South Africa and from, I would say, Europe. We see on a much smaller scale participants from Asia. Some of the headline deal that was announced earlier this year was Danone's acquisition of Fan Milk in partnership with Abraj. And as you know, Danone is a global player across several categories, including water, baby food, dairy, with a large presence in Europe, South America, some presence in the US and in Asia, and very minimal presence in sub-Saharan Africa. And so this was a platform that allowed Danone to increase its scale in West Africa, as Fan Milk is an operation that cuts across a number of West African countries. We also see many South African corporates looking for avenues to tap into the growth opportunities in Nigeria. And we're increasingly seeing large Nigerian corporates, starting with the banks, who have gained significant scale in Nigeria and are looking for opportunities in other countries across the continent. That will also drive another wave of M&A.
Do you think we'll start to see some interest from maybe Asia going forward?
We are already seeing interest from Asia. A couple of colleagues and I were in Beijing recently. But we find that the interest from Asia is largely around infrastructure and natural resources. And those are more project finance type plays than pure M&A plays. There are ongoing conversations we have with companies from Asia around where a company, say in China or in Indonesia, has built a significant brand in Asia or Southeast Asia and feels that that brand can travel given perceived similarities in demographic factors between those home countries and Nigeria. They're increasingly looking for platforms they can acquire to expand into the region. However, in addition to capital, one of the key factors that would inform a large corporate's decision to acquire in a foreign country that is reasonably far away is just managerial depth. So these Asian counterparts that we speak to, whilst there's an abundance of capital, often ask themselves, do they have the managerial depth, skill, and expertise to make a big acquisition of a corporate in Nigeria and manage that corporate efficiently?
Now, of course, as we go into next year, what will drive M&A activities in Nigeria?
I think there are a number of factors. I think there may be certain policy changes that may influence M&A. Obviously, one of these things would be the continued implementation of indigenization. So we think there'll be a continued shift in wealth or in asset ownership from IOCs to indigenous players. We also expect to see significant interest still in the Nigerian consumer industry. Literally every day we get inbound calls of people looking for assets in this space.
Can you tell us more about that?
A lot of these discussions are proprietary, but anything that is tangentially related to consumer spend, food, beverages, packaging for consumer products, we see interest in from breweries, we see interest in from acquirers, domestic and foreign. And we also think that the insurance space is likely to experience a bit more consolidation. There's plenty of discussions that are ongoing, and we think some of these will take shape over the next 12 months.
What's likely to dampen the outlook for next year?
The key concerns that people come to us to talk about are what impact do we expect the elections to have on the broader economy and the country. And we keep telling people that Nigeria is in its 14th or 15th year of democracy. We've had multiple elections. And so therefore there's, from our view, if one takes a long-term perspective, people should still be looking to invest. Other questions that are raised are how will monetary policy and foreign exchange policy be impacted by the expected change in the leadership at the central bank, and questions around whether we're seeing a temporary blip in terms of FX pressure or whether it's going to be a more sustained trend. But we find that the more sophisticated players who have invested on the continent for decades or who have spent plenty of time doing their homework are not going to be distracted by short-term blips, but will actually go ahead and make their investments.
Now, the insecurity issues that we had in the north, has this affected M&A activities so far?
It has affected M&A activities, but I think one has to actually take a more nuanced view around how it affected M&A activities. So parties who, you find you have two kinds of discussions with potential acquirers of businesses in Nigeria. There are those who've spent plenty of time doing their homework, and they've invested across the globe in what I would say are jurisdictions that are hairier than Nigeria. And for those parties, what they would do is, in terms of their diligence, to the extent that the company's growth has been driven largely from the north, or has a supply chain that is largely impacted by the north, they would try to understand how this insecurity will affect the operations of the business and price that in to their valuations and also factor that into their value creation plans. And they'll still go ahead. For people who are still unsure around whether or not they want to come to Nigeria, these factors often make them sort of pause their investment decisions until they get better knowledge. Now,
how do we stand in regards to comparing with, perhaps some of the activities in, Ghana or, some other West African countries, for example? How does Nigeria compare in regards to M&A activities? Do we sort of get more activities here than, maybe our neighboring countries?
I think we get a significantly greater share of M&A activity. We're about 66% of the region's GDP. And whenever I speak to my counterparts in Accra, they're envious of the level of M&A activity we get here. We just have a much bigger, much more vibrant economy and more sophisticated corporate here.
Is that likely to go, though, in West Africa?
I think M&A will grow across the region, but I think increasingly the larger players would look for regional platforms. So you'd look for a company that has a presence across 4 or 5 countries and then use that as a platform to expand in the region.